Morgan & Co. Investment Bank has released a new strategy note on the Zimbabwean economy. Lots of issues to disseminate. The 23-page document is called the Zimbabwe Syndrome and touches on a litany of issues plaguing the Southern African nation. Joining us to discuss further, Batanai Matsika, Head of Research at Morgan & Co. Investment Bank. Batanai, good afternoon to you. Thank you so much for joining us. So we can start with, I guess, the composition of government expenditure, where we can take a look at that. It highlights from your report the expenditure outlays for the government of Zimbabwe. In red there at the bottom, employment costs 36%, outweighing capital expenditure at 25%, outweighing use of goods and services 25%. Is that a problem, and how do you solve it?
Okay, so it's a concern in the sense that, a significant amount is going towards a recurrent expenditure, which is employment, which is payment of civil servant salaries and the like. So it limits the government in terms of investing in capex. I think a key concern is the issue of the infrastructure gap that's there. So with a limited or a lean tax base, the government is quite constrained in terms of its resources, and that is why a significant portion is being taken or going towards a recurrent item. So that's a concern. There's no space for capex.
Gotcha. Is there a risk? Because every time we have this issue here in Nigeria as well, the government is borrowing to essentially pay salaries. And the solution is always to cut down. But for employees of government, if you cut down on that, is there not an unemployment spike? If that is the only solution to reduce the fiscal burden on government?
I think, of course, there's that problem of unemployment. But from a Zim point of view, a concern is the brain drain. I think there are strategic public sector areas, such as in the healthcare, for example, doctors, nurses, teachers, and the like. So we're seeing that the country is losing out quite significantly in terms of the brain drain, where skilled personnel are moving into South Africa. They're also going overseas. So that's a concern from a brain drain perspective. But of course, from a disposable incomes and unemployment point of view, is also a factor to consider.
All right, let's talk debt. Your report has a breakdown of external debt. How big of a worry is it in terms of Zimbabwe's fiscal structure? There it is in red, external debt there making up 37%. It's behind bilateral creditors, that's 42%, but it's still pretty high, and you've highlighted it there in red. So how scary is that?
Okay, so the figure that we're looking at in terms of the total external debt figure, it has gone up quite significantly. We're looking at 13.153 billion United States dollars. And the concern is that it's a debt overhang that's limiting the country from accessing more flows from these international financial institutions. So that's the concern, to say that there's a debt overhang, there's a credit issue here. But another concern has to do with the strategy. How is the government going to come up with a debt clearance strategy? And it's an expense, because if you then start paying interest, of course, there's been some token payments, but it's also an expense on government revenues. I think what's required is a proper re-engagement strategy that maps up a debt clearance plan for the nation.
Let's move to another big one, Batanai, inflation. These charts you have up here are scary. Let's put them up. You've got a best case scenario. Yeah, Batanai, your best case scenario for inflation, March 2023, is 475%. Let's look at the worst case scenario. The next chart, that's, I think, 702%. And then you have them moderating to about 529 by the end of of 2023. What are the triggers here for these scenarios for inflation?
Okay, so I think it's worth highlighting that the current inflation figure is 257%. That's the year, right? So that's the current figure. So we are already in triple digits, right? And we are in an environment where we're seeing geopolitical risk pass-throughs actually coming into the domestic economy. The war in Russia, Ukraine, is also contributed quite significantly in terms of wheat prices, which is important. If you then consider bread or food, we talk of fertilizer. Zimbabwe is an agro-based economy. You talk of oil, because we don't have oil, we are import dependent in terms of energy. So those pass-throughs are an important trigger. But as we also move into 2023, I think this is a big factor because we are moving into an election mode where in yesteryears we've seen pre-election there's a tendency for excessive government expenditures. So we've built those factors within our models, and then we came up with different scenarios. We think that there remains a lot of pressures on the inflation front.
And what's the impact? I mean, obvious question. Impact on the average Zimbabwean with inflation numbers where they are right now?
So the issue is disposable incomes, because by the end of the day, we're looking at households here. We're looking at the impact of inflation on your income or savings. So we envisage a situation where poverty levels would actually increase, where there's also rapid informalization and also a degree of brain drain. So for the average Zimbabweans, I think it's a major cause of concern to say that there are no enough social, benefits or social safety nets to actually help some of these households out of poverty.
All right. We had you on when the central bank announced that they will be introducing gold coins. So now that you're back, how has adoption been so far, and will it solve the liquidity problems in Zimbabwe?
So already the RBZ, Reserve Bank of Zimbabwe, has issued around 2,000 coins to the market. So they're priced at about 1,800 USD, which is the international price. So it's around 4 million. So it's not a lot of money, or it won't change much in terms from a mopping up of liquidity point of view. What it changes really is that is the optionality that investors now have, because traditionally investors, I'm talking pension funds, asset managers, would invest in limited asset classes where they could put money in the stock market, or in the real estate, or on the money market. So the gold coin is an interesting alternative, and that is why we're seeing that there's been an uptake, because the coin is also available in dollars, and it's available through a willing buyer, willing seller rate, which is significantly lower than the parallel market. So it's an exciting proposition from a ZWO point of view, and it brings about a lot of optionality from an institutional investor perspective.
Just about a minute to go, you mentioned the stock market. How has your report also mentioned the stock market? How's the stock market performed so far in Zimbabwe so far this year?
So we've seen a lot of measures being put out, capital restriction measures, and they've affected the stock market generally. So on a year-to-date basis, you find that the stock market has moved from a market cap of about 6.7 billion. We're now looking at 2.6. So stocks are down in real terms, simply because there's tight liquidity, and there are these measures that are being put up that are largely contractional in terms of liquidity. So the recommendation now is to say that there's an opportunity to buy into traditional blue chips, companies that we think remain stable in face of inflation. We're looking at consumer stocks, your Deltas, your Inscores, your Simbisa brands, and also some of the exciting financial services counters that we have, such as Old Mutual and First Capital. So those are our recommendations. We think that the measures have triggered a lot of liquidity issues, and that is why the market is looking attractive currently.
All right, Batanai Matsika, Head of Research at Morgan & Co. Investment Bank. Thank you so much for taking us through your report. Always great having you on the show to keep up to date with what's happening in Zimbabwe. Appreciate your time.